machine? Who would you rather invest your money? Well, that's a choice that investors are going to have to make as artificial intelligence becomes increasingly common in the investing space.
Whether you realize it or not, you're already using artificial intelligence, or AI, in everyday life. It gives directions on where to go and suggests news feeds that it believes we would like. And more recently, robo-advisors provide basic financial advice using algorithms that are calculated from the questions being asked. But could AI replace human beings as portfolio managers?
It's entirely possible to remove the human element from investing and rely on a set of algorithms and rules to make the investment. What typically these robo-advisors or AI investing algorithms they do is that they, based on your risk profile, they construct a model portfolio and they dynamically kind of allocate assets to that portfolio based on change in market conditions and so on and so forth. What you will not have is customization. You will not have the ability to correct algorithm or model. The other thing which the AI algorithm does is it removes the human emotion from investing, which often comes in the way of making good investment decisions.
Technopreneur Victor Lai believes relying exclusively on AI is the way forward. A former fund manager and private banker, he realized that many people are being sold products that don't necessarily fit their risk profile.
A lot of people don't understand even the products they are buying today. They're not investing, they're gambling. What if I could give them a game, there is no need to know any technical jargon, and I apply AI to then discover and predict their risk-reward behavior across many others. And so I created the Squirrel Safe Risk Profiler, which essentially offers you a chance to play a simplified game, gender neutral for now, and our AI will interpret your risk-reward behavior and apply it to a global portfolio in real time. Guess where they are?
Mr. Lai says Squirrel Save is different from existing robo-advisors because it's a fully AI digital investment manager.
Typical robo-advisors have a digital shopfront and a human kitchen, giving you a pre-made pizza. At the end of that process, the customer is getting today's product, or worse, yesterday's portfolio, which was created a week, a month, 3 months ago. And all they do is ask you for your taste for the chili spiciness level, 1, 2, or 3, and you say, I've done the risk profile, it's 2. So I give you number 2 pizza, which has that level of spice matching your taste. So those pizzas are all pre-made portfolios. So at Squirrel Safe, our portfolios are only made when you do our Squirrel Safe Risk Profiler, and then our AI goes out into the world, looks at the real-time latest data, and then assembles a pizza that matches your risk profile in real time.
Experts say AI leads to better portfolio diversification, faster reaction times, and lower costs. But they don't believe that investors are ready to remove the human element just yet, although they don't rule it out in the future.
The purpose of AI is not to completely replace humans, but to augment human intelligence. So we do see both coexisting. At the end of the day, AI algorithms are created by humans, right? So the first thing we as investors and the common public will need to demand is explainability. Is the institution which is offering the AI algorithm for investing, are they able to explain how the model works? Because the AI algorithm is working at the back, it is probably taking decisions multiple times in a day, right? So is there something which governs the decision making and takes it into account and corrects it as it goes on, right? So once all of this is done, we'll be able to get better and better trust in AI.
Local bank DBS has just launched a new product that they believe merges the best of both worlds. Called the DBS DG Portfolio, it's a hybrid human robo-investment solution that allows investors to tap on investment strategies from the bank's wealth management team.
Technology allows execution faster. It allows us to really monitor the market. It allows us to actually execute, make it in bite-size, construct the portfolio. And all of that is made available by technology. So it brings scales, it brings down the cost. Then again, so what does the role of human play, right? When there's volatility, I don't want to just know that a machine is monitoring it. I need judgment calls of a human being. So in our case, we leverage the CIOs, the group research, our discretionary team. How does a macro situation impact us here in Singapore? Is it better to be overweight, underweight in a particular geography or an asset class? That is something we believe human judgment is still very important.
DBS DG Portfolio gives investors instant access to a collection of 4 to 7 exchange-traded funds, specially curated by the bank's wealth management team. It was launched for the bank's high-end clients earlier this year. Ms. Wee says that the bank is now targeting retail customers with no prior investment experience.
We want it to be a stepping stone for novice and starters investors. And I think for the wealth portfolio that we have launched so far, we see that 4 in 10 actually are new to investing, right? So that's 40%. And then we see clients repeating their investments after monitoring their own portfolio. We hope such thinking will also continue into the retail platform. It's just that it's just a smaller and a more bite size that they are able to do it. We don't want them to overstretch themselves, and that's something we don't want, right? We want them to think longer term, and we want them to be able to do it in a financially comfortable manner for them.
Experts say, like all new technology, AI will gain wider acceptance once more people start using or interacting with it.